Ever wonder how much businesses pay to keep their money moving? Hey everyone, and welcome back to the channel. Today, we're diving into a world that keeps the gears of our economy grinding, the world of business loans and interest rates. Now, you might be thinking, interest rates? That sounds dry. But hold on a sec, because understanding business loan interest rates can be a game changer for any entrepreneur out there. Think about it. You've got a fantastic business idea, a product or service that people need, but maybe you lack the initial capital to get it off the ground. That's where business loans come in. They're essentially a handshake between you and a bank, where the bank provides you with the money you need to get started, and you pay them back with interest, a fee for borrowing their money. But here's the thing, interest rates aren't one size fits all. They can vary depending on a whole bunch of factors, like the type of loan, your creditworthiness, and even the current economic climate. So, if you're considering a business loan, understanding these factors is crucial. Today, we're specifically focusing on interest rates for Tide Business, a popular financial platform for entrepreneurs. Now, Tide Business doesn't technically offer loans itself, but it does integrate with various lenders, making the loan application process smoother. But before we delve into the nitty-gritty of Tide Business interest rates, let's take a quick step back and understand why interest rates even exist. Why do banks charge interest? Think of it like this, the bank is essentially giving you access to someone else's money, their depositors. They're taking on a risk by lending you this money, so they need an incentive to do so. The interest rate is their reward for taking that risk. It's also a way for banks to cover their own operating costs and make a profit. Factors affecting business loan interest rates. Now, let's get back to business loans and those ever so important interest rates. Here are some key factors that can influence the rate you'll be offered. Loan type. Different types of loans come with different risk profiles for the bank. For example, a short-term loan for working capital might have a lower interest rate than a long-term loan for equipment financing. Creditworthiness. This is a big one. Your credit score is essentially a report card that tells the bank how reliable you've been with managing debt in the past. A strong credit score translates to a lower interest rate, and vice versa. Business age and financials. Banks like to see stability. A business with a proven track record and solid financials is likely to get a better interest rate than a brand new startup. Industry. The industry you operate in can also play a role. Some industries are inherently riskier than others, and that can be reflected in the interest rate. Market conditions. Believe it or not, even the overall health of the economy can affect interest rates. During economic downturns, banks might tighten their lending standards and raise interest rates. So, what about Tide Business interest rates? As mentioned earlier, Tide Business doesn't directly set interest rates. But by integrating with various lenders, they can help you find loan options with potentially competitive rates. However, the specific rate you'll be offered will depend on the factors we just discussed, your creditworthiness, loan type, and so on. Here's the bottom line, understanding business loan interest rates is crucial for any entrepreneur. It impacts how much you'll ultimately pay for the money you borrow. By familiarizing yourself with the factors that affect interest rates and shopping around for the best deal, you can save your business some serious money in the long run. Remember, knowledge is power, especially when it comes to your business finances. With that said, thanks for watching and until next time.